Hi, good morning, everybody. Welcome to today's Solution Spotlight. I will give it maybe like 30 seconds for folks to trickle in and get comfortable before we get started. But yeah, Lily, Evan, what are your favorite things to do in Reno or in San Francisco? Which city do you like better?
If you look at how we spend our time, I guess the answer is probably work. But there's some beautiful hikes out here in Reno. Great scenery, and all our friends are in San Francisco. But Lily, what's your answer?
Definitely when it hits summer, we escape to SF to get more temperate kind of climate. But otherwise, we really enjoy the seasons here. And both Evan and I actually come from, I think Evan, I think you were born, hey Chris, born and
Hey,
raised in Orange County initially before you started moving around, right?
Mhm.
I
I
know
was born in Oregon and I was raised all over. But I was in OC for a while, when I was younger.
And I'm based my family's based out of LA, so we're definitely more California, uh, I would say like inclined.
Yeah, I think all four of us on the screen, hi Chris,
hi Sarah.
are California native or based or what have you. But it's
Well,
oh, and Steve
I'm the
raised.
exception.
Oh, wait, where are you located, Chris?
I'm on the East Coast.
Oh,
How could you forget,
I
Sarah?
know. How could I? Shame on me. Shame, 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 shame.
Shame.
But fun fact, Evan actually um was from my neck of the woods in Orange County, and yeah, just a big name when I was growing up, or at least he was mentioned in the article of our Orange County Register. So
I remember
I knew his name way back in the day. Didn't
that
quite know it
was
until.
that was hilarious. That's like 20, that's 21 years ago now, I think, that must have come
Mhm.
out. So that was a real funny flash in the past.
I
Mm.
know. I was like, I recognize that name
That's hilarious.
somehow in the deep crevices of my mind.
Great.
Hilarious.
So I think that someone from the attendee list mentioned that we're echoing. Evan, there may be some echo on your side, so I would say it seems like we'll go ahead and mute if we're not talking. So I think that might help.
All right. Well, Steve, just let us know some more if that happens. But great. Well, we are all here. It is 11:03, so I'm going to kick us off, get us started. Welcome to today's Solution Spotlight. Water Lily ain't your parents' LTC plan, but it should be. My name is Sarah Williams. I am XYPN's Senior Partnerships Operations Manager, and joining me today are Lily Vittayarukskul. Oh my gosh, I butchered it even when we practiced. And she is Water Lily's CEO and co-founder. And then Evan Ehrenberg, who is Water Lily's COO and co-founder, and Chris Chen, who is wealth strategist at Insight Financial Strategists and fellow XYPN member. I'm personally very excited to bring this webinar to you today, and all of XYPN is really excited because Water Lily was the winner of 2020 of XYPN Live's 2025 Advice Tech Competition, and I believe for the first time ever in the history of that entire competition, they won both the Best in Show and Advisor's Choice last year. So really exciting tech that they brought over to the stage and just really cool stuff that we're excited to have them share with you today. Now, to kind of set the proverbial stage, long-term care is the single largest unfunded liability most families face. Yet it rarely comes up in financial planning meetings, as you might see in your own practice, or that we just kind of see in our purview from the or from our perspective within XYPN. And we hope that that changes. But first, there needs to be a little bit of groundwork that happens. So today, some of that is going to be laid out, and Lily, Evan, and Chris will share how you can incorporate LTC planning into your financial planning process and where Water Lily can help lighten that load or just be incorporated within that. So, before I really turn it over to them, just some housekeeping items. There is going to be time at the end of the presentation for Q&A. So as questions come up, just drop them in the Q&A tab below on that little dashboard within Zoom, and Lily, Evan, Chris will answer those questions at the very end of their presentation. But do drop them even if it's just a simple, is this recording going to be available later? And the answer is yes, it will be. Next, we have some upcoming events that you don't want to miss. The next one is going to be Thursday, May 14th, and that's around property and casualty insurance, what financial advisors should actually look for, and that is being hosted in conjunction with Holistiplan. And then a second webinar that is coming up for you all to register for is marketing your firm. Here's how to stay on the right side of the SEC. And that is on May 27th. Both of the registration links I'll drop in the chat. And then last but not least, XYPN Live. I talked about it really briefly about just Waterlily and how they participated in AdviceTech Competition, and XYPN Live heading this year to California, San Diego. So it's going to be later end of September, and passes are available today. So purchase them. It's such a time. I absolutely love live. Everyone at XYPN on our team just lives for it. It is literally the embodiment of XYPN, and just your chance to meet others, interact with really cool vendors, exhibitors, just like Waterlily, and yeah, experience the magic that is XYPN. So that was a lot from me. I am going to turn it over to Lily, Evan, and Chris.
Thanks so much for all the setup and introductions there, Sarah. I'll go ahead and share my screen and kind of lead us through, and Lily, I'll hand off to you. Um, we're really excited to share with the group here, what we've built with Waterlily, why we've built it, and of course to have Chris here, who is actually probably one of our very earliest adopters, and he's been using the software one of the longest out there. Who's had a chance to use it in practice with many different clients, many different scenarios, and of course a member of XYPN to share with you, his experience, his tips, and everything. As we get started, though, I love to just kind of introduce a bit of ourselves. And Chris, I apologize, I don't actually have you on here, so maybe we'll go through some of our intros, and then we'll have you share some of your background as well for context before we could dive into sort of what Waterlily is and how it works. But Lily, this is, of course, your brainchild and your story to share. So why don't you go ahead and get us started?
Fantastic. It's a pleasure to have everyone here in the room. I'm the co-founder and CEO of the business Waterlily, and as you'll see, we're absolutely obsessed with long-term care and aging. And the reason why is because it's an incredibly devastating event when we navigate it without a plan, and vast majority of families don't have one, my family included. So in terms of my founding story when building Waterlily, I was 16 when my aunt was diagnosed with terminal stage colon cancer. And what came with that was 2.5 years of navigating her daily long-term care needs that came from chemotherapy, her being too frail, and it was incredibly financially devastating for us. We paid any and everything for her care, not knowing that health insurance wouldn't cover it. No one told us about it. And secondly, it did bankrupt a lot of our family relationships. My mom and aunt side of the family came from the Cambodian genocide, and we're first generation immigrant family. And so I thought there was really nothing that could tear us apart since we've been through so much together. But going through a long-term care event did tear us apart. And so that really opened up my eyes to how problematic this topic is without education, and I wanted to change that trajectory. Prior to that, you'll notice both Ev and I are pretty, I would say young faces, but we're also baby faces. Hopefully they'll stay for a couple more decades. Where we started our career quite early. I wanted to become one of the youngest aerospace engineers. And so from 12 to 16 was doing some work with NASA, went to college early at 14 for it, and was fast tracking there. But when we navigated long-term care in my family and that devastation, that's when I decided to pivot my career and fixing this problem. So I developed my background in genetics and AI at Berkeley, led product and engineering at multiple early stage companies, thought someone would solve this problem, and they weren't solving it in a way that really got family members to lean in. And so that's what we built here today. But I'll let Evan go ahead and share his background.
Yeah, thanks so much, Lily. So as Lily shared, we're kind of, young faces in the aging space. Like Lily, I got an early start, went to college at 11. And I think what Sarah was sharing at the beginning was when I graduated from community college in Southern California and transferred to Berkeley, there was a little article in the news. I guess Sarah had read and then noticed the name XYPN. So that was a real funny blast in the past, but 20 years ago. I'm in my 30s now. But went to Berkeley, then went to MIT for a PhD when I was 16 in computational neuroscience and machine learning. So a lot of the AI that we see around today is things I was working on. Um, then ended up falling into startups, built a company called Clara Health, and then after selling that, started investing in other really brilliant founders. And that was really how I came into this. I met Lily. She checked all the boxes as someone who was really smart and really passionate about something, and so I wrote a small angel check. But what was super interesting was, she was a first-time founder, and yet I kept getting all these really, really positive updates from her about her founder journey. And usually it's not so positive. Usually doing a startup is incredibly hard and frustrating. I was like, well, why, why is it working? Like, what have you built? And so I tried the software for myself, and I put in my, as you'll see in a bit, I put in my medical information, and I got back these predictions for my future long-term care needs. And I went through learning, what, that long-term care is not covered by insurance, what my cost would look like, what my likelihood was. And while I had a relatively low likelihood, I think it was about 30%. My age of needing care was in my late 70s, which felt alarmingly young for me. And at the time, I had gained a lot of weight during COVID. I was overweight for the first time in my life, and that was a big wake-up call. And so I went on a diet and hired a personal trainer and lost the weight. And now I think Waterlily predicts I'll need care in my early 90s. Um, and it's a lot more expensive as a result because of compounding healthcare inflation, but I'll take that. But then also seeing the cost of how healthcare inflation for me can compound over decades and decades and decades. Really needing to start thinking about this and preparing for how I'll plan for this. It also motivated me to start maxing out my HSA. And so seeing, just how powerful the software was in just me using it personally and recognizing how, hey, I'm a healthcare founder and even I wasn't prepared for this, the need became obvious very quickly how important this was and why Lily was having so much success. And so I got super excited with the impact this could have and sort of turned from, easy investor to annoyingly involved investor to eventually co-founder, which has been really exciting for me. Um, and one of the things I helped Lily with initially was reaching out to wealth advisors and getting their feedback on the platform. And I think Chris was actually one of those really early voices who was happy to share. This would have been at least 2 years ago in like this very, very early iteration of the platform. How could this be used practically with clients? What does it look like? And we've just been learning constantly from folks like Chris and all of our customers and iterating to make the platform, sort of where you'll see it today. But Chris, would love for you to share your background and kind of how you came to know Waterlily a bit before we go in. Oh, you're muted still, Chris.
That's better. So I'm Chris Chen. I have a small RIA in the Boston area, Inside Financial Strategist, and have had that since 2012 or so. And so when we look at planning, in particular retirement planning, like it was mentioned before, long-term care often ends up being one of the big question marks, and we never have really known how to handle that before. And so actually, the first time that I spoke with you guys is with Lily a long time ago, and she didn't have a product yet. And so I thought it was pretty exciting. And so I was really excited when the product finally did come out. It's never soon enough from the point of view of the users, actually. And it did answer a lot of the questions that I had from a financial planning standpoint. And therefore, I think a lot of the questions and that my clients had from that standpoint also. So anyway, that's how I came in touch with Waterlily.
Yeah. Thanks so much, Chris. I'm looking forward to our conversations about how to use the platform as we go through things. Um, I'll share just a snapshot of where things are at. Lily started the company about, I want to say, 4-ish years ago, but the fundamental underpinnings to power the technology, the predictive algorithms, were so complex that about 2.5 years was just building those out, sort of in stealth mode. Launched about 2 years ago, getting constant feedback from folks like Chris, iterating multiple times per week. And then in October, when we were at XYPN Live, is when we had launched a new sort of last mile end-to-end method for not just evaluating insurance if that was a part of a long-term care plan, but if that was going to be a part of the solution, actually closing that last mile, whether you were insurance licensed or not, being able to actually get clients access to that. And since then, the last just over half a year, we've brought on pretty much all of the major asset-based hybrid carriers and a growing number of the traditional policy carriers. So Nationwide, One America, Lincoln Financial, Securian Financial, CareScout, Equitrust is coming on right now, and a long wait list of the other carriers. So really exciting momentum there. We've also this quarter just launched to power one of the 4 largest broker dealers. And then interestingly, we have a lot of consumers who come to the platform um, that have been looking to access the software. And we were just covered by the New York Times a few weeks ago and had over 2,000 people go through. I think this is really just evidence of, even though Waterlily has built a platform for professionals to use with their clients, I think this is really just evidence of the pent-up demand that there is for holistic, comprehensive long-term care planning, and how many people are looking for something that's more detailed, more involved. I think if we look at our metrics, we now have about 6 times as many people visit waterlily.com every month as there are people who even do Google searches for the term long-term care. So we're really excited for how this can empower professionals like yourselves to have a better conversation about something that we think is so important in retirement planning and just in life planning in general. And so what Waterlily has done is really trying to take all of the complexities of long-term care and long-term care planning and not smooth them over or ignore them, but actually appreciate them and bring all of the nuance into the planning process, but to break it down into sort of bite-sized steps so that it's not overwhelming either for a new advisor who may be starting to do long-term care planning for the first time or for their clients. And essentially, as we're constantly trying to iterate, we're always trying to make it, easier and simpler without giving up any of that nuance. And so I think it's interesting. You'll see, even today, we still release multiple times per week new functionality, but also things get simpler. But we'll essentially kind of go through from start to finish, where start is your client may have never even heard of the word long-term care. They may be like me and wonder, oh, is this healthcare? Like, what is this? All the way through to evaluating the most efficient methods to finance this event and actually putting a solution in place. And so the way that we actually start with this is to personalize everything to the client. And probably what we're best known for is those machine learning algorithms that Lily built in the beginning, which use this intake form. It's about a 3 to 6 minute intake form. It's reflexive questioning. So if you're very healthy, it's pretty fast. If you have a lot of medical conditions, it will take a bit longer to go through. But with this intake form that your clients fill out, we'll actually be able to predict their personal, most likely future long-term care scenario. And the clip here is just a small sliver. It goes pretty deep into medical information and family history. But Chris, I know one of the questions we often get is, well, what is the appetite for clients to fill out this intake form, or how do you share it with them? What do they think? So I'd love if you actually would share a little commentary on your experience with this. Sorry, muted still.
Again, it'll be the bane of my life. So yes, I use it as part of our planning process, and we use it relatively to beginning of it is that we start the planning process, as many of you do, with data gathering, and so we gather everything, and then we send the clients the long-term care questionnaire. And we I tell them beforehand what it is for. It is to help evaluate their need for long-term care. So generally speaking, it is not a topic that people want to talk about a lot. Although when you get to the point of planning for retirement, maybe in your late 50s or early 60s or something like that, you have probably had some experience with that because you've had parents or other elders who might have gone through it or gone close to it. So people understand that it is important, and people actually appreciate to have a way to evaluate that in a rational way. And in fact, I think that they sort of like the idea of finding out if they will be needing long-term care or not. One of the key data that is produced by the software is the probability of the person filling the questionnaire, needing long-term care at some point. They are very interested in that point. What they seem to be somewhat less interested in is finding out how much it may cost because they're basically saying, "Oh my God, is this going to be horrible?" And but it's better to know than not to know, right?
Thanks so much, Chris, for sharing that. So to Chris's point, once the client finishes the intake form, you have a couple options. If you have clients who are really self-starters and they just kind of want to get in there, you can actually give them access to the results we're about to walk through immediately, and they can kind of take a first pass themselves, then sync up with you later. We see most advisors typically like to do is once the client submits the intake form, they get the plan and then they schedule a time to walk the client through so that the client has no risk of getting confused and you can kind of walk them through everything, explain all the different details. But even that, we tried to make it really a guided flow where we introduce the concept of these predictions that are based on over 500 million data points that are personalized to the client. We show that client's individual likelihood of needing long-term care and the age we think it starts, as well as the shape of that event, how long we think their long-term care needs will be, how the care intensity increases over time. And then we take those care needs and we map them onto the cost of care in your client's zip code based on what costs would look like today. We also layer in how we think that cost is expected to grow over time with compounding healthcare inflation. We use the CMS's actuarial projections, which currently are at 5.4% for future healthcare inflation, and we essentially compound that over time up until the likely long-term care event. You can edit any of these assumptions and input your own inflation assumptions, for example. And then we also account for any family involvement that may be replacing paid professionals and actually bring costs down in order to show a dollar amount in future dollars that we want to be able to prepare for, whether that's going to be fully through self-funding or if we're going to look at any protection products to leverage or any combination of the above. And to Chris's point as well on the cost piece, these slides are a little outdated. If you use the platform today, there's a bit of a nicer layering in, especially around healthcare inflation, emphasizing that, look, this is going to be a big number, but the very fact that it's big means that you also have a lot of time for your investments to compound in their growth. Or if you're looking at an insurance product that has inflation protection, for that to grow as well to keep pace. From here, we see that typically clients have much better understanding of kind of what long-term care means for them. And most importantly, they're leaning in. We've seen that when you talk about national averages, as Chris said, this is an uncomfortable topic. People don't usually like to discuss it. And if you use a national average, it can be easy to sidestep and say, well, now I'm going to be different. That's not going to happen. I'm going to die fast, or it's going to be easy. It's not going to be so expensive. My family will take care of me. Sort of hand wave it away. But when you start to show some of these personal numbers, what we've seen time and again is that people start to lean in and care about this and actually want to build a plan because it feels much more real and harder to sort of just sidestep and avoid. Chris, if you have any commentary to share on this from your own experience, I'd love to hear what you've seen.
Yeah, totally. So I think all starts with the percentage, and I think you had it earlier. The percentage probability of needing long-term care. And in the case that you're presenting there, the percentage probability was 88%, which means that it's pretty high. The software comes up with an average that's around 56%. And so 88% is pretty high. It gets close to the top. At that point, when you're a client, you start to get concerned and you do want to plan for that. Right. So sometimes clients come with on the opposite end. I've had one that came around 20%, I think, and at 20% is easier to avoid. But even then, they won't because they understand that it is important. One of the key items that we do in retirement planning, obviously, is to help the client avoid running out of money in their lifetime. And that is one of the key items. So the figures that you see up there, which I think Evan will show on a future page, are really the future cost. They are the cost of what it will cost whenever Jane here will end up needing it. And so it is affected by inflation, and it's a big number. Right. And so the question ends up being, so how do we plan for a $2.2 million estimated cost when Jane might have a net worth of, say, $2 million? That means that she will be she won't be able to make it, right? And so that works because Jane is now able to plan for that, either through by putting some money aside or by transferring the risk of long-term care to an insurance company or of some kind. Right. So overall, it's a pretty good thing. In the past, many of you may know, it may be familiar to many of you, is that I ended up sort of guessing what it would be. I used the Genworth a statistic with respect to care, and eventually you put a number in there that may or may not be right. And in Jane's case here, what Evan showed before is that she would need something like 4.5 years of care. And so if you are familiar with Right Capital, for instance, Right Capital assumes a default 2 years of care. Right. And so in this case, even if the cost that is assumed by Right Capital is correct, 2 years just isn't going to make it. Right. And so when you put in the financial planning software the right data, then you come up with a better number and you come up with a better projection of where your client is going to be.
Thanks, Chris, so much for that. And speaking as well about the right number, I imagine I see some comments or some chat notifications. I can't read them, but in case folks are asking about things like the accuracy and things, I'll share two thoughts here. One, for accuracy, we actually back validate with all the data because we've actually seen families go through and need long-term care or not and just pass away. So we're actually able to do cross-fold validation to show the accuracy. But also, this isn't a crystal ball. These numbers are not guaranteed to happen, but this is far more accurate than using national averages. Because when you look at national averages, you're looking at everybody in the US, whether or not they look very much like you or like your client. Whereas what we're doing is our machine learning algorithms are looking at our very large, very representative sample of the US, and essentially filtering down to the people whose sociodemographic and medical and financial information has looked most similar to your clients. And we've seen that statistically, our predictions are much more accurate than using national averages. So again, it's not a crystal ball, but it's a much, much better starting point. And then you'll also see later on, we do invite you to, if you care, to test different scenarios. If you want to see, well, what if long-term care was 10 years? You can click two buttons and see what that looks like, and you can adjust and model however you want to see it.
Hey, Evan.
Yeah,
Let me
Lily.
go ahead and dive in here just because I know you can't see the Q&A. I'm doing my fastest to type as quickly as I can to
Uh-huh.
some of the really great questions. And a large chunk of them is around the cost of care, the inflation piece. How are we using the healthcare inflation? So we use CMS's actuarial tables, as you mentioned, that it grows at 5.4%. And you'll see that moving forward, the way in which we calculate costs is care phase specific as well. And you'll see that it's a great way to educate these clients on what long-term care actually is. And you'll see that there will always be an ability for you to edit the assumptions. So we don't go with an assumption and say you just have to go with it no matter what. We don't believe in that. We do think that we can try to anchor you with as much credible data sources as possible as we try to make assumptions. That you would yourself likely choose, and majority of our users have validated that they likely choose. But anywhere from healthcare inflation rate, you can edit. Anything from your zip code in which you decide to live in versus where you want to be live in now versus where you want to be in long-term care, you can edit that zip code cost. If there's a specific care resource, such as home care agency or an assisted living or nursing home that you do want to consider for any one care phase, you can also edit the specific zip code cost of care that we automatically have personalized to that client sitting in front of us. So I wanted to answer that. I'm going to go ahead and answer the open Q&As as well here, but I wanted to share that verbally and let Evan continue with talking about how we educate and personalize this planning experience.
Yeah. Lily, were you saying the rest of them you'll save for afterwards to answer?
Oh,
Or
you're
you're
gonna,
gonna
it's more of you're going to naturally answer it as you
Okay, cool.
explain more of this stuff.
Glad to hear that. Well, speak up if I accidentally skip something. But yeah. So from the previous slide we showed a future cost of $2.2 million, and you could just take that and start solutioning. That's already really pretty detailed. But what Lily took the extra step to do is to help educate people on what long-term care really looks like and what it looks like for them, and build a care plan. Because for her family, when she was going through it, obviously a huge impact was not being financially prepared. But another big one was just being totally blind to what long-term care was going to look like, what the demands were going to be of the family, what their options were, and just not even having a plan in place. And so we built in what we kind of call like care planning or kind of logistics implementation, where we actually take that duration breakdown. In this case, for Jane, it's 4.5 years, and we predict what the progression of care needs will be by phases. We break it into three phases: early care, moderate care, and full care. And full care is sort of like nursing home level care. And this is what most people think of when they think of long-term care. And this is a really helpful education opportunity to share that, yes, you may eventually need nursing home level care, but that's really just kind of the final, very worst phase of long-term care. It can actually start in the home. And you have different options of either aging at home or looking at independent living or assisted living, and having that conversation. And so we predict how long each of these progressive phases will be. And then in each one, we click into it and we can have that conversation of, do you want to look at a care facility? And if so, what kind is appropriate? For early care, nursing home is way overkill. Independent living is sort of more appropriate. Or do you want to look at aging in the home and having professionals come into the home, or just having your family take care of you? And then to Lily's point here, anything where you see a little pencil icon, you can edit those costs. So in this zip code in particular that we have here, the average hourly cost is $29 an hour today. We inflate that to show the cost in the future. If you have a specific place in mind, you can edit the cost as Lily shared. Now, most clients we see will choose home care. But actually, before I step into the next one, Chris, is there anything you want to share on kind of this discussion of aging in the home versus in a care facility, and maybe ever like editing these costs based on research you've done?
Yeah, so I think the first item there is to understand what the difference is between the various phases. And for those of you who have looked at long-term care before, then you know that there are activities of daily living that insurance companies look at in order to authorize the care when there is an insurance policy. And the six activities of daily living are basically normal things such as, being able to get out of bed, being able to shower, being able to dress, and so on. I mean, basic things. And insurance companies look at it as if you need two out of the six, then they will start paying. And so the thing is, so how do we do that? How do we, as a person who is going to be needing long-term care, handle the difference between the various phases. And in general, I find that most people want to age in place. They want to stay at home. And possibly this is something that is reasonable when you're in early care. When you are at the other end of the spectrum there, which Evan is going to get to, I'm sure, is when you need 5 to 6 activities of help with 5 to 6 activities of daily living. And that is the situation when you're probably better off in a nursing home than at home. However, that is a choice for everyone on what they want to do. I have known people who have, insisted on staying home. And it doesn't really get that much cheaper, actually, when you need 5 to 6. At 1 to 2 activities of daily living, what you're talking about, if you're going to rely on professional help, is about someone coming into your home for a few hours every day, right? When you're looking at the other end of the spectrum, it is when you need, when the need is probably closer to 24/7.
Mhm. Yeah, Chris, actually, speaking of, we update so frequently, just at a conference a couple months ago, somebody shared, hey, for full care, you're predicting the number of active caregiving hours. But to Chris's point, at that point, you really need 24/7 availability. Can you make a toggle to show that? And so we did. And then finally, the numbers actually aligned with, yeah, for full care, aging at home is usually more expensive even than a nursing home, despite how incredibly expensive a nursing home is, just because that 24/7 care element is so pricey. Um, and so we get to have this conversation with clients. And as Chris was sharing, a lot of people will choose to age in the home, at least for the early care phases. And there we actually make another prediction, which is how different members of the family are expected to step in and provide care. And if you have a client and their spouse, you can even have both partners do their own intake form and then link the two accounts. And we'll actually flag to you if you might be relying on care from somebody who we think may need care themselves at that time and probably isn't a reliable physical caregiver, probably would be too frail to actually, lift you out of bed and bathe you and things like that. Um, and these were transparently probably the hardest algorithms to create in this entire process. Incredibly difficult to build these predictions. But I know it was really important to Lily because that was part of what broke things down in her family was all of these expectations of who should be doing what even when those expectations maybe didn't align with what reality might align for. And Lily, if you want to share any more details on that, because I know you spent an inordinate amount of time to make this possible, and I know you see it a lot as well with how families interact with the software.
I, yes, I could definitely answer here. I would also say I've also seen proportionally the clients spend an ordinate amount of time on this slide in particular. Out of everything that you could actually share with them, this is probably the most meaningful insight for them to understand that moves them out of their mindset of, oh yeah, long-term care is something that I guess we could plan for. It's about being comfortable in retirement, to then realizing that this is actually about protecting my family and my legacy is
Mhm.
really at the core of what this conversation is. So you take some, what we see day in and day out is this is exactly the side that you want to be able to get to, and you will naturally get to in our software in this conversation where everyone says, I want to start the home. If you start the home, we're going to predict how exactly your spouse, your children, or other family members would step in by default, the weekly commitment. And all of a sudden, your client goes from maybe your historical conversations are your client, let's just say John says, "Oh yeah, my wife, if anything happens to me, she'll take care of me. Or if anything happens to me or my household, my kids will step in as appropriate." And you see a switch in perspective when they see these hours that they become almost self-guided and responsible. They say,
Right.
"Well, actually, my wife, 8 hours of care per week, is this physical caregiving?" And we say, "Yes." Well, my wife, isn't she going to be in, when you link profiles together, isn't she going to be 82 at this time? She's going to be way too frail. I don't think she should take care of me. Or when they look at the children hours of like 10 hours of care per week to start, and again, these care hours could grow in more intense care phases later on. They then say, "Oh, well, my daughter, she lives 5 states away from me. I don't know if I want to have to rely on her to take care of me as well." So you
Mhm.
now have that conversation, and with clients with the means or with the motivation, zero out those hours, and they really focus on how do we financially plan for this topic afterward.
Right.
But this is a slide you want to get to, and Chris, of course, I'm sure that you have seen this with your clients.
Yeah, I think it's incredibly important there is that people don't want to, in general, people don't want to have to rely on their children. And when they plan for that, the children are in the prime of their lives. And the reality is that by the time that you end up needing it, they may not quite be in the prime of their lives anyway, right? And they may have a job, they may have kids of their own. It's difficult. The reality is that in this page, what you see here is that Evan has budgeted 0 hours from children. In reality, children will help anyway, right? Is that when you are in that situation of needing long-term care, you probably need help with other things, such as paying the bills, such as picking up groceries and things like that, which are not included in the standard long-term care paradigm. Yet, these are things that need to be done. But this is, like Lily was saying, this is eye-opening, and this is what ends up shifting people from wanting to stay at home to agreeing to or planning to agree to go to a facility.
Thanks so much, Chris and Lily. Um, and so we essentially go through this exact same flow for moderate care as well and for full care and show a bit of a cost summary. And from there, we're ready to go ahead and look at how we want to fund this. And Waterlily allows you to add a variety of self-funding resources as well as to model insurance or annuity products. Um, and I'll start by just showing an example of insurance. One of the cool things we built about a year ago or so is the ability to upload any insurance product, whether it's a quote that your client got from an insurance agent or it's a policy they bought 15 years ago. You can just take any policy document, a quote, an illustration, an executive benefit summary, something from the carrier, drag and drop it into Waterlily. Our AI will read the entire document and extract all of the terms of how it functions. The premium payments, the waiting periods, the inflation protection, the daily or monthly benefit limits for different care facilities, the benefit pools, if there's death benefits, if it's indemnity versus reimbursement, every single detail. We are obsessed. Um, and then we'll show it to you here in kind of a nice apples to apples comparison of how do different insurance products maybe compare and line up. This is something we've heard from folks can take like an hour to do for an individual, and you can now do it in seconds with Waterlily.
Right.
This is also
Actually,
really, oh, go
I'm
ahead,
sorry.
Chris.
One
Yeah.
of the side benefits, one of the collateral benefits of Water Lily is that when you upload the long-term care policy, if the client has it, then you get a synopsis there of everything that's important, and you can use that for your financial planning software. I saw a question about integration, and so that's sort of low-tech integration, but it's way better than having to read the entire document on your own.
Mhm. Yeah, thanks so much, Chris. On the integrations front, I'll share we have a public integration with Wealthbox. Our Redtail and Salesforce integration should be launching very shortly, probably in the next 30 to 60 days or so. And then we are eager to integrate with the various financial planning softwares, but those are likely going to be taking a bit longer, just from what we've seen so far. So obviously you can use this to analyze, any different policies and compare them side by side. This can also be really helpful if you have a client who maybe bought a policy 10 or 20 years ago, and they're now facing either forced rate actions or optional reduced benefit options. And you can actually model each of those different options that you have and the different premium payments that align with those benefits to see which has the, best expected ROI under your predicted scenario, or if you want to model different scenarios, see how those play out there as well. So that becomes less of a guessing game and more of a knowing game. Um, and with each of these, we also, these can kind of produce these really nice PDFs that compare things side by side. And you have these nice PDFs on this. The thing I want to show next is something we go that steps a big leap beyond how I think insurance is typically evaluated. But before I do, Lily, I saw you come on camera, so you might have something you want to add.
So I also just want to share when it comes to looking at various policies, understanding the details, understanding how to model rate actions. If you are navigating those right now, or you're in the thick of kind of that sort of conversation, or you're about to go into one, you shouldn't feel afraid to have that conversation because you do have our licensed support team that can help step in if you need to. So when you sign up for the platform, you have specific client cases, you can go ahead and actually submit any case to us in your various forms in which you want to share it, and we will do our best to help customize and tailor fit sort of the solution that you're looking for to the system because it's so powerful. So if you're navigating them, just know that we do have support that can help out with those on a case by case basis.
And if I may add also is that I haven't quite done it that way, but the ability to have the policy analyzed is really powerful when you are facing one of those rate actions, and then you can sort of plan now with is a policy going to be sufficient? Meaning, if they're proposing to reduce the benefits, you can actually see whether how that reduction in benefits affects the future, and if it increases the cost instead, or then you can also see the consequences, and that's, I think, extremely powerful from a planning standpoint.
Thanks so much, Chris. I think that leads me really into this next piece of sort of how we model policies. So I've just shown how we can show you here's how your policy details look, and here's an example of us actually uploading an insurance policy so you can see it in action. What I think is the coolest thing we do is besides being able to show you a summary of your policy, we'll actually run the math to show you how your policy will function under different scenarios. This is really important, at least to me, because you look at an insurance illustration, and these are built by the carriers, and their IRR calculations and their tables assume that you spend every single penny in the benefit pool, which may happen if you have a particularly long-term care event, but for a variety of reasons, it may not happen due to daily or monthly limits, due to waiting period limits, due to reimbursement limits, a whole bunch of things that could cause it to pay out less. And here, as you can see, we'll actually model the math month by month to show how much we expect under a given scenario an individual would pay in premiums. And then based on all of the details of the policy, how it would actually pay out, not the theoretical if it pays everything it possibly could, but based on the long-term care plan that you have built, based on your predictions, where you want to age, what that's expected to cost, how much your family is stepping in, all of these details, what's it actually going to look like? And that is what we think is so powerful when you're looking at a rate action or reduced benefit option, or if you're just comparing multiple different policies. Instead of just debating, well, this one has this term and this one has that term, you can just say, well, how does it actually function if you put it into a certain long-term care plan? And if you're worried about robustness, just click on edit care assumptions and show a shorter event or a longer event. And you can see how all these policies actually dynamically play out without having to spend hours and hours and hours to do all of that math yourself. You can just click and see it instantly. So that's one of my favorite aspects of the platform. Um, and the thing that we did next with that is we supercharged it, where this is actually what we launched at XYPN 2025 last year. It's what won us both the Audience Choice and Judges Choice awards. And landed us in Wealth Management's 10 to Watch for 2026, is we took this ability to model sort of any insurance product and show sort of how good we think the ROI is for a given scenario. How much are you paying in premiums? How much would it actually realistically pay out in claims? And we used that to instantly brute force solve for sort of what is the best or most fiduciary or highest expected ROI policy option for a given scenario. And I'll show you what that looks like. So here we have Securian Secure Care 3. This is an asset-based hybrid insurance product that has been uploaded. We ran the math, and the total ROI on the $100,000 premium investment is expected to be 440% if it were to pay out the way it's supposed to for this long-term care event. Here we're just going to go ahead and model simple self-funding to compare. We'll set aside $100,000, but we'll invest it. We'll assume that it's going to grow at 6.5% annually. And then we'll assume that when we have to go and liquidate this to cover our long-term care expenses, we'll contend with a 20% capital gains tax. And so we crunch the numbers and we can see that the ROI here is actually expected to be a little higher, even after you account for those taxes. Um, Now we're going to go ahead and look at insurance options. And what we've done is we've just brute force analyzed from over 1 million policies. So what we did is we formed a subsidiary that got licensed in all 50 states, that got appointed by those 6 carriers I mentioned, and we're trying to get every single carrier, and so far, so good, it's working. Um, we do a few things. One, as you can see right here, we analyze underwriting for you because last thing you want to do is find a policy that seems great, your client gets denied, feels like you set them up for failure. So our AI actually has the underwriting guides for every single product that we have in here, and we'll take all of the detailed medical information your client shared with us in that original intake form we saw at the beginning of the webinar, um, and use that to show if we think that they'll actually be eligible or not. The second thing we do is rather than say, well, here's policy A, here's policy B, which one's better? We just say, I'm just going to play stupid. Go ahead and pull every possible configuration of this quote, every combination of inflation protection, monthly benefit, death benefit, extension of benefits amount, waiting period, any which way you can pull it, give them all to me. We'll crunch the math, we'll actually model it. And then you can see here, this top policy we found has a 1.5 times better expected ROI than the original policy we found, as well as self-funding. And that's not because One America is better than Securian. It's just because for this individual client, the way that we were able to configure this One America policy was much more optimized for their long-term care event than the Securian policy that got pulled kind of randomly or following what would have been previous best practices. Um, and that's because essentially we're not paying for anything we don't expect to use. And so the premiums get to be much more efficient for the claims that we expect this individual would have, which is how we're able to do this. And so it's fine to do a little bit of math on the side. It would take about 11 years to do this manually, and Waterlily does it in a few seconds. So that's fun for me. Um, so this really helps kind of evaluate what, if you're looking at insurance, again, you can also use Waterlily just to purely self-fund. I think a lot of people do use it that way. But if you're going to look at insurance, we want to look at it realistically, not just what the carrier says is going to happen. We want to give you that fiduciary power, and we want to supercharge it so that instead of saying this is better than that, you can say, well, this is sort of the global optimum. This allows you to find an option that maybe makes sense to include in your plan. If you do, we've also gone through and made it really smooth to actually go through an application process. And whether you're licensed or not, we actually invite you to go pretty far into that. And then if you're not licensed, you can hand off to either our licensed team, or if you have an insurance agent you trust, you can certainly hand it off to them as well. And they can use the software and they can put their own writing codes and everything. I'll just show, I don't know how relevant this will be for a lot of the audience, but I'll share briefly how we've made that simpler, which is we allow you to download the illustration, which already has all the client's information pre-filled, as well as yours. Or if you're not licensed, it can have our subsidiaries information pre-filled, so it's all compliant. Have all the details there. We then capture your client's consent to receive all of their documents electronically. And so we'll then email them the illustration, as well as all of the educational leave behind materials for the product that they're looking at for the state that they're in. On the application itself, we try to make it really easy for the client as well, where we built AI that is able to pre-fill over 70% of the application based on the information that was already shared with us in the original intake form. So for each carrier we have on the platform, we painstakingly rebuilt the entire application in Waterlily so that we could power this feature. And it actually takes about 80 pages of paperwork and enables you to finish it in under 10 minutes. In those 80 pages, if you've ever seen an insurance application, the way the questions can be worded can be very, very confusing. And it's really easy to run into a not in good order or a NIGO error and get it rejected and lead to just weeks of back and forth on getting a policy actually approved. And so we also built out this comprehensive AI NIGO check that doesn't just look at, oh, is the social security number 9 digits long? It actually reads it and compares it with everything it's seen in the entire application. So here we're saying, look, all fives for social security number is probably fake. It'll also check, hey, you've got 2 people with the same social security number. It'll also check, hey, You listed medications, but you forgot to list why they were prescribed. That's asked in the question. So it's this really detailed, comprehensive check that sort of prevents you from actually getting to an application that would get rejected. I'm not licensed myself. I've used this. I've been overwhelmed by the application, and it's really cool that this essentially prevents me from screwing up.
Mhm.
Oh, go ahead, Chris.
Oh, no, sorry. I just wanted to mention, I mean, most of the audience here is going to be XYPN members, and they're going to be fee onlys, and so they
Yep.
don't take commissions, as I don't take commissions either. And so there is no, it doesn't mean that it is not a useful tool, because if your client is going to need help, you're going to have to suggest something, and that works
Yes.
also.
Yep. I think for fee-only advisors, the relevance that we see here is, yeah, you're not going to be the ones that are going to be going through all of this, but uh, to the extent that you want to be along for the ride and see all the details and really understand what your client is going through, it sort of helps bridge that gap so that you can really understand what the experience looks like and make sure your client isn't going to be thrown in something that is going to be confusing or overwhelming. Um, but with that said, Chris, we go through DocuSign for all the signatures, and we try to take, a process that's oftentimes weeks or months of back and forth and streamline it into something that can happen in a day, within a week, and make it really painless for the client. I'll kind of wrap up here, and we have 2 minutes for questions. Obviously, lots of folks like Chris have really enjoyed the software, and if anybody here is interested in trying it out, you can go ahead and scan this QR code or just go to waterlily.com. We do two-week free trials. Otherwise, it's $47 a month, and you can get started in 5 minutes and build an intake, build a long-term care plan for yourself. And we also have, we'll do dedicated onboarding with you for free if you just reach out to our team. But I know we're pretty much at time. Lily, was there any questions from the Q&A that we want to snag?
Yes. Sorry, guys. There is, guys and gals, there's like 8 open questions. I'm typing as fast as I can. I definitely can't get through all of them. I would say the important piece here, let me just go ahead and try to answer some live. So can I do business if I don't have an insurance license, registered solo RIA, and do not want to take commissions? And the answer is yes. So you could actually apply. So we can actually help you apply for an insurance product that you decide is actually a good fit for the client sitting in front of you. And so all of that would be moderated by our licensed subsidiary. All of our team members are W-2 employees, myself included. So we don't personally earn a commission, but the commission has to go somewhere. So it just gets absorbed into the subsidiary that helps power our support team. Of course, commissions are less than 1% of our revenue, so it is not also an area that we will be biased in now and moving forward in the future. I think you already saw quote and apply. Can Waterley help with the decision to 1035 exchange not from a term life, but or not from a term life policy to a hybrid policy or hybrid LTC? The answer is yes. So just go ahead and reach out to us. If you have a client scenario, we could actually look at what the cash value of that policy is and that conversion. Will the software model 10 pay closely held C Corp purchase options? Yes, we do model various premium options from single pay, 10 pay, monthly. But Evan, in terms of C Corp purchase options, do you have an answer for that?
That would have to be probably custom. I don't know if we have that built into the model. That'd be something we do by hand on the side.
Mhm. So just let us know. That is something we could definitely put in since we're obsessed. And yes, Desiree is clear that our subsidiary allows non-licensed financial advisors to directly go ahead and help a client purchase an LTC product without having to talk to someone externally or a broker or whatever else. Um, from a compliance perspective, does the advisor need to update their RIA, ADV, and/or advisory agreement?
They
So
shouldn't.
I believe not. Honestly, you're just doing an analysis. If you're going to actively get into the business of selling policies and collecting compensation for that, then you would. Otherwise, I think you're fine. But check with your compliance.
Awesome.
Also on compliance, I'll mention we're HIPAA compliant and SOC 2 Type 2 attested, so I have to share that with anyone. But I do know we're probably at time. I saw Sarah come off mute, so I'll hand it off to you, Sarah.
Yes, very perceptive. Well, thank you all for your time. Evan, Chris, Lily, especially you all for just delivering such valuable information and showing us the value of Water Lily and then how LTC planning can really be incorporated into the firm. As we see there are a lot of questions that came through. So I'm going to just throw this out there. If you have anything else that you want to just ask Lily and Evan, then by all means, reach out to them, hello@joinwaterlily.com. Lily had also shared a link on signing up for Waterlily, demoing it for 2 weeks for a free trial. So she can drop that link again as well. And then if you're interested in joining XYPN membership, then you can schedule a call with one of our teammates and we'll be happy to talk membership with you and just all of those really cool deals that you might get with us. And maybe if you want to even join or come to XYPN Live and see really cool people like Evan, Lily, Chris as well. But until then, my friends, thank you so much for spending this last hour with us. Hope you have a good rest of your day. Lily, Chris, Evan, thank you again for just spending this time with us and sharing your knowledge. Really appreciate it.
Pleasure.
Right.
Thank you, Sarah.
Thanks, everyone.
Bye, everyone.